Namaste, my dear friends. Now referring to you, customs law consists of Customs Act 1962, followed by Customs Tariff Act 1975, and various valuation rules under the customs. We have valuation rules for imported goods, exported goods, and followed by the import of goods at concession rate of duty rules. Like that, we have various types of rules. Apart from this, we are going to invite various notifications, circulars of the CBIC, followed by judiciary pronouncements by way of judgments, right from the Commissioner of Appeals to the level of the Honorable Supreme Court of India. We are going to be invite various judiciary pronouncements, especially by focusing the attention on the part of High Court decisions, followed by Supreme Court of India landmark judgments under the customs law. And we are going to wind up our journey on indirect tax laws and practices by inviting attention on the part of Foreign Trade Policy 2023, which is applicable for your coming exams. Dear friends, when we refer the Customs Act 1962, it has its limited applicability. Only when there is import of goods, export of goods taken place from India to India, means exports from India, import to India, export or import from India to a place outside India or from a place outside India, then only Customs Act is operative. Otherwise, if there is no import or export, question of levying of customs duty or the question of applicability of customs provisions does not arise. If there is no import or export, there is no Customs Act. That's why I said it has limited applicability only with regard to goods, not the services. Please careful. Only goods, import or export. We have definition for the term goods under the customs law. I will refer to you the definitions in a simplified manner. These are well applicable even for the intermediate level, which I will brief to you first, followed by advanced concept, namely the levying of duty of customs, non-levying of duty of customs, exemption notification applicable or not applicable, inviting the judiciary pronouncements. I will refer this one by one. For the time being, you understand, my dear friends, the elementary issues I am referring, intermediate level issues I am referring with regard to customs law. Start with the basic concept of customs, where we have the concept, if you refer here, customs duty payment by Indians is not a new practice. It was a customary practice for our Indians right from those ancient dates. The history refers, in the case of Kautilya's Arthashastra, levying of duty of customs, it was a customary practice. Right from those days when the kings are ruled the kingdoms, from those days, from those ancient days onwards, we have a customary practice to pay custom duty. Resultantly, for our Indians, customs duty is not a new subject. But only thing is, from time to time legislations has been passed. Accordingly, we have to update our knowledge with regard to customs law. In this regard, I am bringing to a notice, as per the Kautilya's Ardhashastra, it was referred shulka, consisting of import duty and export duty that was collected the city gates on goods coming in and going out respectively. Shulka, nothing but duty. Sanskrit word shulka is nothing but duty. It was levied on those days. We have the background of history for it. The goods are coming to a particular kingdom. Those people who are bringing the goods to sell in that particular kingdom first approach to the king and giving to the king some gift, namely their perfumes, cloths, ornaments, alcohol, liquor, as a gift to the king. The king got impressed with the gift. Once he is satisfied, then he says, "What I can do for you people?" Then these vendors who are coming from far away from that place, as a strangers coming to that palace and requesting, placing the mercy petition of permitting to sell their goods in that kingdom. Resultantly, king says, "Okay, fine, go ahead. We give the permission to you to sell the goods in our area." So, like that, on those days, the gift is given in terms of kind. Now the government is collecting in terms of the money, namely duty. On those days, when the goods are coming into the particular place or going from a particular place, supposed to pay the shulka, which is nothing but duty. So, like this, we have a customary practice to pay the custom duty. On those days, we might have been paid in kind. Now, the government of India, by formulating the legislations, enacting the act, and levying the duty on import or export by collecting in terms of currency, in terms of money. Further, my dear friends, there is a constitutional authority to levy the duty of customs. Entry number 83 of the Union List of the 7th schedule to the Constitution of India is empowered to levy the customs duty by the central government of India. And the custom duty brought into force to levy in India from 1st February 1963. Though the act was enacted in the year 1962, the levy of duty of customs brought into force from 1st February 1963 onwards. We have some definitions which are important to note at elementary level, at intermediate level. One by one I am referring here. Adjudicating authority, nothing but the authority which are adjudicating the orders, thereby to protect the interest of the revenue. In simple terminology is to say that the adjudicating authority is an authority which is involved in day-to-day operations of the act for ensuring that smooth functioning of the particular operations of the provisions of the Customs Act 1962, followed by the rules and regulations along with the Customs Tariff Act 1972. That means to say that along with the Customs Tariff Act 1975. So, in the given case, adjudicating authority will refer day-to-day operations of import or export, and if there is any revenue loss taken place, they issue the notices and passing the demand to collect that, to protect the interest of the revenue. They are called as adjudicating authority. But who are not adjudicating authority means the tribunal not an adjudicating authority, CBIC is not an adjudicating authority, the Commissioner of Appeals, which is judiciary, not an adjudicating authority. Then who else are called as adjudicating authority? Superintendent of Customs, Assistant Commissioner of Customs, Deputy Commissioner of Customs, Joint Commissioner of Customs, Additional Commissioner of Customs, followed by the Commissioner of Customs. They are called as adjudicating authority. But adjudicating authority does not include Commissioner Appeals, does not include the CBIC, does not include the tribunal. Here, which tribunal you are talking, sir? I am talking about under the Customs Cess Stat Tribunal. Customs, Excise and Service Tax Appellate Tribunal only is available here, which is not come under the purview of adjudicating authority. Further referring, assessment. Assessment which includes nil rate of duty levied goods assessment in case of export. Assessment is important to note, without which we do not know what is our export performance, what is our import value to pay the import duty. When we talk about assessment, my dear friends, I will explain to you here all our imports are subject to import duty unless specifically imposed, specifically issued a notification not to levy the import duty. All our imports subject to import duty unless specifically exempted by virtue of a notification. Similar to that, all our exports free from export duty, because the government of India want to achieve A minus B greater than 0. A is our export, B is our import. Neglecting the imports, encouraging the exports is the basic concept of the customs. Resultantly, A minus B greater than 0 is our foreign trade policy. A is our export, B is our import. Resultantly, our exports more than our imports, then we will wind up the show with a net positive foreign exchange earnings. That is what really wanted for Indian economy, especially to what we can call to protect the economy of country by not having much more inflation. To control the inflation, what is required here, especially the good foreign exchange reserves. How it is possible to mobilize? Because of the exports. Our more exports are earners of the foreign exchange. Resultantly, the government of India will get more foreign exchange than that of spending the foreign exchange by importing the goods. In that case, our foreign policy A minus B greater than 0. A is our export, B is our import, is our concept. In this process, all goods which are exporting, even though nil rate of duty on export, one should understand to quantify the assessment, the value of export goods, because of which the exporter will be get export incentives. In case of import, all our imports subject to import duty unless specific exemption is granted for the given period by way of notification. What do you mean this? How to understand this? I will tell you, my dear friends. In the given case, sometimes before the government of India conducted the FIFA, Federation, the International Football Association under 17 or under 17 women or men, as the case may be, and prior to that, the government of India was conducted the World Cup in India. Now also World Cup is going on in India. In that case, if any equipments you are importing to use in such World Cup, in such FIFA or in such Commonwealth Games which is conducting in India, for that purpose you want to import some equipments, exemption notification issued by the government of India saying that if you import ball, bat, mat which are using in the World Cup, exempted from the payment of import duty. Once the World Cup is completed, that exemption will plug back. So all our imports subject to import duty unless there is specific exemption notification which is in place. At the same time, my dear friends, when you assess the assessment for our import, assessable value for imported goods is at a CIF value. Customs means under the customs, cost, insurance and freight. All our imports should be at a CIF value, should be measured. The assessment for the imported goods is at a CIF value, which is called assessable value. if I am liable to pay import duty, I am supposed to pay the duty on CIF value of import. All my exports at FOB value free on board. If I am liable to pay export duty in case if there is notification issued by the Government of India by imposing the export duty on our export, in that case that export will be subject to export duty. Where to be calculated, on what value should be calculated? The value should be calculated on export of goods is at FOB value, free on board value. I will explain to you, don't worry at all. What do you mean by FOB value? What do you mean by CA value? With a diagrammatic presentation I will explain. For the time you understand, my dear friends, when you wanted to refer assessment value for imported goods, at what value you have to arrive? CIF value, cost, insurance and freight is our assessable value to pay import duty in case of import of goods. All our exports is generally free from export duty. Even if there is export duty levied by virtue of a notification, that export duty will be computed on FOB value of export. That means export purpose, the assessable value, the assessment will be at FOB value. For all our import is at a CIF value. Sir, in what circumstances the duty will be levied on exports, sir? Generally, you said all our exports free from export duty. Without payment of export duty only we are exporting. Then in which circumstances you are going to say that export duty will be imposed by the government? I will tell you. One particular situation which may going to cause to levy the duty on export. Nowadays, recently you come across onion prices going up and up like anything. Almost it touching 100 rupees per kilo of onions. In such case, Government of India said, hey, exporters of onions, don't export it. No. We are getting huge price from outside India, foreign currency, we want to export. Because of your export, what happened? Supply into domestic tariff area, domestic market in India become less. Supply became less. It kickstart the demand for the product, which will be in return going to be hit the price of the product. That means demand increases, price also increases. Why demand increases? Supply decreases. Why supply decreases? You are exporting the goods of onion instead of selling in India. Therefore, the Government of India said, hey, exporter, don't export the goods of onion. No, sir, I want to export the goods of onion because I'm earning the foreign currency. In that case, you want to export it. We are going to levy the export duty. Exporter says, you levy export duty, no problem. I will pay duty. But I want to export the goods because I'm getting more money from other country. In that situation, to prevent, to minimize, to discourage export of onions, the government may levy export duty on export of onions by notification. Once the price in India neutralized, then question of levying of export duty on such onions does not arise. Then the government will plug back the notification which imposed on such export of onions, export duty will be revoked if the price neutralized. So the intention of the Government of India not to levy any duty on exports unless circumstances demand to impose the export duty. So further referring to you, my dear friends, assessment here includes the self-assessment, the provisional assessment, the reassessment or final assessment as the case may be. We do have the term conveyance. Under the customs law, conveyance which is defined, which includes vessel, aircraft and vehicle is called as conveyance. Further, we have the term coastal goods. What do you mean this? How to understand the term coastal goods? I will tell you, my dear friends. Coastal goods, how to understand. Coastal goods means goods are passing from a port in India in a vessel through a port outside India. I mean to say, to a port within India, not outside India. Coastal goods means goods are transporting in a vessel from a particular port in India to another port in India passing through ocean. See here in the given case. Assume a scenario here. As you are aware of that, this is a coastal area. This is a coastal area. Coastal area. This is a coastal area. This is all coastal area. Coastal area. Coastal area. This said Arabian Sea, Indian Ocean, Bay of Bengal. Coastal area. Transportation of goods from where? Let us say from here, a particular place, from a Vizag port. For example, I am telling you here, from Vizag port, a vessel passing from here to Chennai port, came to Chennai port, or from Chennai port to Port Blair port. Port Blair, Andaman Nicobar Island, which is in India. So, transportation of goods from a port in India to a port within India is called coastal goods, which are not going to levy any kind of duty, my dear friends. There is no duty going to be levied on such goods. There won't be any duty on such goods. Come back. So my point here to say, my dear friends, is the point here to say is coastal goods means the coastal goods are those goods which are moving from a port in India to a port within India without payment of import duty. Import duty does not arise on such coastal goods. Further, customs station, customs area where the goods are going to be kept before payment of duty or to clear from the customs. Customs port is a designated port where allowed to import or export the goods. Customs station also be like that. Customs station means for the customs port, airport. We have for the air customs for air transportation of goods, sea customs, and for the land goods transporting through land route, land customs. Land port. We have land port, sea port, as well as airport. Further, dutiable goods, the goods which will attract the duty on account of import or export, as the case may be. Entry is made in the bill of entry. Entry made in the bill of entry or shipping bill or bill of export. What do you mean by bill of entry? What do you mean by shipping bill? What do you mean by bill of export? Will be explained to you. Don't do it at all. These are all the separate terminologies which is globally recognized terminologies, and using practice globally recognizing and practicing terminologies. Bill of entry means what? I will explain to you. Further, shipping bill means what? I will explain to you. And bill of export. Bill of entry is a documents of title. In case of import of goods, the importer should submit the bill of entry to clear the goods. From where? From customs. Shipping bill. If I want to export the goods through sea or by air, as the case may be, shipping bill should be submitted to get a prior permission for export of my goods. Bill of export is the goods I want to export through land route in a vehicle. Then I have to submit to the customs department bill of export to get the prior permission for exporting my goods through land route. Further, my dear friends, export. Exported goods. Goods are going outside India. By taking out of India to a place outside India. Exported goods. Exported goods. Followed by a particular case law. What do you mean by exported goods? In the given case, what happened? In the given case, what happened? A vessel set to sail to USA from Chennai port. Goods has been loaded in the vessel. Goods has been loaded into the vessel. After that, what happened? That vessel, before crossing the 12th nautical mile from the baseline, sunk into the water. In that case, export taken place. India means we have a definition for the term India. The term India has been defined here. The term India means up to 12 nautical miles from the baseline. Up to 12 nautical miles from the baseline. If that is the case, within 12 nautical miles, before crossing the 12th nautical mile, the vessel got sunk into the water within 12 nautical miles before crossing the 12th nautical mile. The term India means up to 12 nautical miles. In that case, is export of goods. The law of the land here says, in the given case of Rajendra dyeing and printing mills case, since the vessel is sunk in the water within 12 nautical miles from the baseline of Indian coastal area, resultantly export not taken place. Therefore, it is not export of goods. Export of goods means, as per section 2 subsection 19 of the Customs Act, the term exported goods means any goods which are to be taken out of India to a place outside India. India means up to 20 nautical miles from the baseline, within which if the vessel, after loading the goods in the vessel for export, got sunk in the water, not export, said by Supreme Court of India in the case of Rajendra dyeing and printing mills case. Very good, excellent judgment it is, landmark judgment it is. Further, my dear friends, referring to you here, the term further. What do you mean by foreign going vessel? Foreign going vessel is a vessel which is not going to attract any duty. Foreign going vessel, which includes the vessel, Indian vessel, as well as the foreign vessels carrying out the joint drilling operations into the Indian customs waters beyond 12 nautical miles within 24 nautical miles. In that case, which is not levying any export duty or import duty, because it is a foreign going vessel, which includes the fisherman going to catch the fishes and bringing the fishes into the shore, also be called as foreign going vessel. Fishermen not liable to pay import duty for catching the fishes and coming to the shore. Further, my dear friends, the term goods we have here definition. The term goods we have definition, somewhat wider definition than that of our GST law definition. The term goods defined in section, the term section 2 subsection 52 of the customs of the CGST Act. The term goods defined all type of movable goods, including actionable claims. As it was defined, it is defined under section 2 subsection 52 of the CGST Act. That is one type of definition. But here under the customs law we have a very clear elaborative definition. Goods includes vessels, aircraft, vehicle. As a whole, goods includes conveyance. All the three called as conveyance, as you are aware of that. All the three called as conveyance. Goods includes stores. Goods includes baggage, means luggage of the passengers. Goods includes currency notes. Goods includes negotiable instruments. Goods includes any other kind of movable property. That is what elaborative point is. Any other kind of movable property. Any other kind of movable property. That is elaborative one. Here, there is a case law here with regard to term goods case law. What is this case law refers here? I will tell you, my dear sir. In the case of RST Limited, in the case law here is belongs to the Supreme Court of India. Case law it is actually it is the case law is Associated Cement Companies Limited. Associated Cement Companies Limited. The apex court, named the Supreme Court of India, given judgment. What is the facts of the case here with regard to the term goods? Dear friends, I went to London as an Indian. I went to London. I have purchased software, 100 crores of rupees of software, which is dumped in the particular what we can call the paper format in a paper format, clearly written bunch of paper format, because the software, the coding and all clearly written and prints out taken, the bunch of file consists of software programming. I purchased for 100 lakh 100 crores outside India, and with that bunch of paper format of software, I landed at Chennai port in India. Department of Customs said, "Hey, Mister, you brought 100 crores worth of software in a paper format, which is goods. You liable to pay GST. I mean to say, sorry to say, you liable to pay custom duty. Liable to pay custom duty on import of these goods." As an importer, I replied, "Sir, see section 25 of the Customs Act. If I import the software, which is free from import duty, exemption is there, sir." Department contended that in that case, you should have been bring this software in a software form, means intangible format, but you are bringing in the tangible format by taking the printouts of the software copies. The bunch you are bringing is a software printed one. That means you are carrying goods only, liable to pay import duty. That dispute between the department and the importer reached to the Supreme Court of India in the case of Associated Cements case. Supreme Court of India said, "Hey, Mr. Importer, if you have been bring software in a software format, software is a software format, then we won't have any objection to grant exemption. But you are bringing in the hard copy format, which is goods, liable to pay import duty," said by the Supreme Court of India in the case of Associated Cements Limited case, judgment given in favor of the department against the taxpayer, which I am now referring for your kind consideration, reading the content. This particular point I am referring for your kind consideration as follows. Case: RST Limited imported drawings and designs in a paper form through professional courier and post parcel. However, the Assistant Commissioner of Customs valued these drawings and designs and levied duty on them. RST Limited contended that customs duty cannot be levied on drawings and designs as they do not fall in the definition of the goods under the Customs Act 1962. Do you feel the stand taken by the RST Limited is tenable in law? Support your answer with a decided case law if any. That point I am referring here. In the case of Associated Cement Companies Limited, the Apex Court observed that though technical advice or information technology are intangible assets, but the moment they are put on a media, whether a paper or cassette or desk jet, desk or any other thing, they become movable and are thus goods. Therefore, the Supreme Court of India held that drawings, designs, manuals, and technical material are goods liable to customs duty. Therefore, the stand taken by the RST Limited is not correct in law. So, the judgment is given in favor of the taxpayer, in favor of the department against the taxpayer, in favor of the department against the taxpayer. Further, import goods are coming. Import means coming to India from a place outside India. Imported goods means goods are imported from a place outside India into India. Importer, the person who import the goods, who is located in India, is an importer. India, up to 12 nautical miles, it has been extended from the baseline. Indian custom waters, which has been extended up to 24 nautical miles from the baseline. Like this, continental shelf. This point is already referred to you under the GST law. Again, I am referring the term India. India means from the baseline. From the baseline here. Here is the baseline. Is the baseline. That's the coastal area. Shore. From the baseline to 12 nautical miles. 12 nautical miles. Called India. Up to this India. Up to this is India. From this up to this India. From the baseline to 12 nautical miles, we call territorial waters. From the 12th nautical mile to further 12 nautical miles, contiguous zone. From the baseline, 24 nautical miles it is. We call this entire zone called Indian customs waters. From the 24 nautical mile, over a period of 176 nautical miles, exclusive economic zone. As a whole, from the baseline, 200 nautical miles it is. Now, from 12th nautical mile to 200 nautical mile from the baseline is continental shelf. The meaning actually speaks India means 12 nautical miles. Deemed territory of India extended up to 200 nautical miles. This is India. This is a deemed territory of India. Meaning thereby, listen, if you have a particular oil rig, assume a scenario, there is a oil rig. You have here oil rig, extracting oil rig. Where it is located? Within 200 nautical miles. From far away place, from outside India, you imported goods to use in rig beyond 12 nautical miles, but within 200 nautical miles. The goods came from outside India in a vessel, and the goods has been consumed in the oil rig, which is beyond 12 nautical miles within 200 nautical miles. If that is the case, levy of import duty will attract. There was a case law here from the Supreme Court of India. There is a case law here from the Supreme Court of India in the case of Aban Lloyd Chillis offshore. This is called oil rig. This oil rig, where it is located within 200 nautical miles from the baseline, but beyond 12 nautical miles from the baseline. Beyond 12 nautical means beyond India. Within 200 nautical miles, within deemed territory of India, the oil rig is located beyond 12 nautical miles from the baseline, but within 200 nautical miles from the baseline. In that case, such oil rig is there. A vessel came with some goods from outside India to consume in the oil rig. In that case, is it import? Is it import of goods? The importer says, the importer says, the importer says, since my oil rig is beyond 12 nautical miles. What is imported goods? Goods are imported into India. India means 12 nautical miles. I am beyond 12 nautical miles, consume the goods by importing from outside India. If so, it is not import of goods, not liable to pay import duty set by the importer. In our given case, Aban, Lloyd, offshore, Chili's case. Department says, sir, we agree, India defined up to 200 nautical miles, but we too have 200 nautical miles from the baseline, which is called as exclusive economic zone, which is deemed territory of India. Therefore, you consume the goods within the deemed territory of India, therefore liable to pay import duty. On the other hand, if you have oil rig beyond 200 nautical miles, namely high sea, in that case, we never going to ask any import duty. If you have oil rig here and import the goods from other country and using the oil rig, we never going to ask import duty. But you are within the exclusive economic zone, within 200 nautical miles, within the territory of India. Therefore, you are liable to, within deemed territory of India. Therefore, you are liable to pay import duty. Is the stand of the department. The matter got disputed, went to Supreme Court of India. In the case of Aban Lloyd offshore Chili's case. Aban Lloyd Chili's offshore case. Sorry to say. Aban Lloyd Chili's offshore limited case. Supreme Court of India said, in the given case, hey Mr. Importer, since you have oil rig within the deemed territory of India, which is extend up to 200 nautical miles, so it is import into India only. You will able to pay import duty. Department claim is justifiable. Your claim is not justifiable. In the given case, goods imported by the assessee for consumption on oil rig which are situated in continental shelf or exclusive economic zone are deemed to be part of Indian territory. Therefore, the supply of imported stores or goods or equipment to the rig by a ship will attract import duty. The goods attract the import duty. Gather clarity, my dear friends. We are referring the intermediate portion only. Prohibited goods, the goods which are not allowed to import or export. Further, domestic tariff area. What do you mean by domestic tariff area? India is a domestic tariff area other than the SCZ, other than the EOU area, we call domestic tariff area. Yeah. Now coming to the term stores. Referring to the term store, store nothing but goods include stores. What do you mean by store? Vessel which is set to sail from one country to other country, it takes lot of time to reach the other country, not in a day or two. It takes almost 15 days, 30 days. If the weather is not so good, it may take sometimes 2 months, 3 months also, depends upon the distance to travel and depends upon the weather condition. While a vessel sailing on shore from one country to other country, uh, such vessel crew members want to have the food. There won't be any restaurant nearby uh, the vessel because it's ocean going vessel. They should carry food stuff to meet requirement of 2-3 months to the crew members. In that case, they used to carry along with them foodstuff, spare parts. Even if the repair takes place, engineers are there to repair the vessel then and there. So these and all we called as stores. Stores nothing but under the term goods, goods includes stores. Now the point arises here, if the goods includes stores, that stores got consumed by a vessel nearby Indian port. a big mother vessel came from other country to Indian port. It is an Indian port. Here it is a port, and it is halted for unloading the goods. The foodstuff inside of the vessel fully got consumed by the crew members. It is an ocean going vessel. And the transshippers, small boats going near to the big vessel, we call mother vessel, for the want of unloading the goods part by part by showing the boat note, by showing the boat note. So these transshippers also joined with the crew members of the big vessel and eaten away the food, entire foodstuff. Foodstuff is now exhausted. Foodstuff is fully over, empty vessels. These food got consumed where? Near Indian port in India. Means, is it import of goods liable to pay import duty? Because goods include stores. If so, liable to pay import duty? Question number 1. Question number 2. From India, foodstuff supplied to that foreign going vessel. The supplier of the food to the foreign going vessel supplied the stores. Is it export for the supplier of the food to the foreign going vessel, and the supplier of the food can ask for duty drawback for export? First of all is the export. These are the questions has been addressed by the Supreme Court of India in the case of V.M. Salgonkar case. In the case of V.M. Salgonkar case, which is presenting in front of you as follows. First of all, I will tell you the goods got consumed, stores got consumed on board ocean going vessel. On board, the goods got consumed. If there is a case which is not a import, because it is a fine going vessel. It is a fine going vessel where it is carrying the stores, namely foodstuff, which may got consumed any place. Fortunately, unfortunately, they came to Indian port. There it has been fully got consumed. It is a fine going vessel. Therefore, stores consumed in India of a foreign going vessel, not import of goods, no import duty. Second point, supplier of the food from India to such foreign going vessel is called as export. Yes, it is export. That supplier can ask for duty drawback, well, eligible to apply for the want of duty drawback. It was the judgment of the Supreme Court of India in the case of V.M. Salgonkar case, which now I am presenting here as follows. By referring, bringing of stores is treated as import. However, there is special provision for stores under section 87 of the Customs Act 1962. Imported stores consumed on board on ocean going vessel, that is foreign going vessel, are exempt from import duty under section 87 of the Customs Act 1962. Since the ship is ocean going, stores consumed on board will not attract customs duty. Regarding the smaller ships which are employed to unload the cargo from the mothership, they are termed as transshippers. These are also treated as ocean going vessel, as was decided in V.M. Salgonkar case by the Honorable Supreme Court of India. Hence, stores consumed by small vessels would also be exempt from customs duty. Further, stores supplied to the vessel will be treated as export as per section 89 of the Customs Act 1962, and hence they will be eligible for customs duty. Got the clarity, my dear friends, is the way in which the decision or the judgment is given by the Supreme Court of India.